Here's your Forbes Daily Briefing for Tuesday, May 28th. Today on Forbes, investors gave a teenager $85 million to build hydrogen weapons. It's not going well. At 19 years old, Ethan Thornton had a grand vision for a new company. He'd do away with the U.S. military's centuries-long reliance on gunpowder munitions by developing an array of hydrogen-powered weaponry. He named the company Mach Industries, and, after dropping out of MIT, began R&D work on an artillery that could be replenished by hydrogen generators deployed on the front lines, claiming it would give the military a critical battlefield advantage. Investors swarmed over what appeared to be an up-and-coming defense tech company led by a visionary teenage dropout. Sequoia's Sean Maguire co-led a $5 million seed funding round last summer. It was the venture firm's first check issued to a defense company. 3 months later, Bedrock's managing partner, Jeff Lewis, led a $79 million Series A investment, valuing the nascent startup at more than $300 million. But Mach's giddy financing had been prefaced by a troubling and near-fatal misstep. Months earlier, Thornton and another employee were almost killed while testing a Mach weapon. 4 former employees with knowledge of the matter told Forbes that Thornton was reaching into a blast chamber surrounding a hydrogen-powered gun when the gas unexpectedly ignited, blowing up the machinery and sending a spray of shrapnel across the room. Thornton was miraculously unharmed, but a colleague helping with the test was rushed to the hospital with hundreds of pieces of metal in his body. The employee recovered, though some of the shrapnel remains. Mach is part of a new cohort of defense tech companies, led by young, patriotic entrepreneurs looking to build businesses serving America's national security interests. They're driving a defense tech boom engorged with VC funding. Between 2018 and 2023, $100 billion in venture funding poured into the sector, per PitchBook. But here, Silicon Valley's quote, "move fast and break things" ethos seems an unwise approach to building weapons. Interviews with 9 current and former Mach employees reveal a chaotic early-stage company that failed to deliver on the vision investors were expecting, compounded by safety issues and a juvenile approach to leadership. Beyond hydrogen-powered firearms that work like pneumatic potato cannons, Mach had sold investors on its quote, "Prometheus," a mobile hydrogen generator that could be deployed on the battlefield. But, according to 3 former employees, the device was scrapped when Mach couldn't figure out a cost-effective way to produce aluminum fuel necessary for hydrogen production. Eric McManus, a former program manager and U.S. Navy veteran who left Mach last year, said, quote, "The most concerning thing about it all, honestly, was the financial aspect of it. To get that much money, that soon, without any real product, without a flight test, without a demo, nothing." The tests that did happen did not go well. During a jet propulsion test last year, Thornton attempted to hold a drone down with his hands while it was at full throttle to help steady it for launch, according to interviews with multiple people who were present. Senior employees were dismayed. Among many risks, the drone could have tipped over and effectively become a projectile, endangering everyone on the test range, 3 ex-staffers told Forbes. Range administrators shut the test down, they said. Meanwhile, Mach employees struggled with Thornton's cavalier leadership style and childish sense of humor. At one point, a TV in the Austin headquarters main foyer displayed a timer called, quote, "Time until Taiwan invasion," which, according to one photo seen by Forbes, estimated a Chinese attack would occur in 1800 days, the time by which Mach must be ready to deploy its product. McManus, the Navy veteran, said, quote, "I was in the Taiwan Strait while there was civil unrest in 2008, and he was probably still in middle school. I found it very offensive." Thornton declined to answer a series of detailed questions, but did publish a lengthy blog post on the company's website addressing some of the issues Forbes raised. He wrote, quote, "We're building an incredibly difficult company, and as with most startups, the chance of failure is high. As a 1-year-old business, we've made many mistakes, but as part of our culture, we work to fix them, learn from them, and relentlessly improve." Bedrock and Sequoia didn't respond to comment requests. For full coverage, check out David Jean's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.